Good afternoon everyone, Philip from Blackburn Markets here. Hope you're all doing well. Another quick market update. Just so you know, my colleague Anish has just done a fundamental analysis of the market as well, really in depth, so have a look at that. It is the video before this one, so do go check that out. I will be covering some of the charts he's been covering, but I'll do the technical side of things as well, like covering the US dollar, Japanese yen. I'll be covering that, and also we'll be looking at the gold. There are a couple of other pairs, but not a lot. We've got 5 pairs to go through, so a nice quick video before the end of this trading session, as it's all coming to the end of the week now. But we'll dive straight into it, and let's see what we're looking at for either this finished trading session, or maybe even the start of early next week as well. So we'll just dive straight into here. We have the Aussie CAD. This is the hourly time frame. So we have just sort of hit this double bottom. Actually looks a bit better on the 4-hourly chart. As you can see, the bases of the candles match up quite nicely over here. You can see they're about equal length. The wicks as well. Oh, we've got the wrong thing here. That one. So we can see they're equal lengths. The bases do match up. Got a nice little reverse candlestick there, looks like a nice hammer, made a nice big green candle to the top. It has, however, hit a bit of a resistance that we have had previously over here, support. So if it breaks through, we could see potential moves further up to this key area over here, where we could see a bit of consolidation if it does tap further into the zone, even all the way up to these wicks. As you can see, it has caused a bit of a consolidation in previous history as well, which actually made this very nice sort of head and shoulders move to the downside, and now that we hit this double bottom. So if it does break past that, we could see it further move up to this area over here of 0.9, around about the 0.94, I would say at least the 0.94439 level if it does start to go up. If it breaks down to the bottom, we could see it go a fair bit lower, maybe matching all the way down to this previous wick we had here on the daily time frame, which is around about 0.92455. So that could be a good level. You can see it has offered us previous, actually let's just zoom out. You can see it has offered us a previous bit of support before as well. So moving on to our Aussie Swiss franc. So again, it's going to be very similar to this. So we can sort of match your trades up. You can see here we'll go down to the 4-hourly as well. You can see it also hit this sort of support area. Start off with that green candle to the top, but it could still come further down. If we do look on the hourly, I'll explain to you why. So you can see here we've had this bottom over here. It has broken through, so it now caused it to look like it's a possible resistance that it has hit. But if we look on the 4-hourly, we can see it still has not quite yet broken the low that we have had on the 8th. So we'll see maybe if it does go past that. We do still have this low over here that we had back in January at the start of this year. Further down to that, you can see it's a bit of a nice clear move if it does go further down. If it goes to the top side, that'll be great. You can see there's not a lot of traffic. All the moves have been quite nice and uninterrupted. So like I said, if it breaks to the top side, quite a nice move back to this area over here, around about the 0.7134 all the way to the 0.1600, which is a nice psychological level as well. And moving on to our Canadian dollar, Japanese yen. So you can see now again we've broken. This is a 30-minute time frame. So if you do catch this one, it could be quite nice. You can see it has broken through this top. It is looking for a possible retest of this zone of 84.777. So we'll see if it does bounce on it. We can see a possible short move to the upside. If it does continue higher, we can see we do have a bit of, here on the daily time frame, a bit of a resistance coming up at 85.008, run about the, let's say, I would say 85.1, which is another psychological level for the market to start slowing down to again. If it does go further down, we can see a possible move down to here, and if this does cause to be look to be a nice strong support, maybe a bit of consolidation between these two lines, between the 84.777 and the 84.553 zone. So obviously we can have it like the wicks moving out. So if you want to be safe about your trading, do wait. I would say wait for the candle close outside of these zones. If it does close below, keep in mind we do have this very, very strong, just pull this one down, very, very strong support here, 84.434. So that could maybe slow down the move if it was to break to the downside. So the upside is looking good. The downside does have a lot of traffic. If it is going to move further downwards, it could be a slow progress to the downside. And moving on to our US dollar Japanese yen. So if you've been keeping an eye on our Twitter page, our Instagram page, Facebook page, you would have noticed that we have been posting, keeping you guys updated on certain charts, like the gold has been good for us this week as well, and especially this US dollar Japanese yen. This morning we had a couple of updates on it, which ended up turning out quite nicely. So we're looking at this support area that had been, or well, consolidation zone that had broken, and it used it as a retest to continue further to the upside, breaking past this high, or the sort of, I wouldn't say a high, but the sort of resistance zone we had back on a daily time frame as well. And now we're looking for a potential move further higher into this consolidation zone. You can see here on the daily time frame, this has caused a bit of consolidation and can do so in the future again. So this could be a nice target for it to move further to the upside. There could be a chance that this section over here could cause it to slow down, but it's quite slim. So, but like I said, the unexpected can always happen in Forex or whenever you're trading, so do be prepared for that. If it does look like it is going to close when you get closer to the zone, maybe look at managing your risk, moving in some stop losses if you were going to take this trade to the upside. Now, if it does hit the zone and it proves to be a very strong resistance area, you could see consolidation between these two zones. It's quite a big gap between these two. It's about 40 pips. So if you're looking to scalp it, on the 30-minute or the 1 hour, I would say maybe better if you were looking to scalp on the 15-minute for more shorter sort of trades. 40 pip move could be quite nice, because as you know, if you go down to the lower time frames, your stop losses are smaller, and you could maybe look at increasing your lot size as well for that. And scalping is quite nice, especially on Fridays, because the market tends to move quite nicely because everyone is trying to fill in their last trades, closing their last trades. So obviously orders are being placed before the end of the weekend. People usually don't want to keep trades up over the weekend, because Monday tends to be a little bit unpredictable and could cause some serious damage to you if you're not sitting at the computer. Because the markets are being opened, as soon as they open, the market could gap or, like I said, do some damage to your account. So this is the reason why people are closing their trades, getting out as much as they can, especially the newer retail traders who are a little bit inexperienced. Could be placing a lot of trades, trying to figure out what to do on Fridays, because the market is so volatile and gives a lot of movement, so people just want to be in it for some reason. Now we'll move on to the last pair we have, which is gold. Like I said, this has also been doing very well over this whole week, actually. Since the start of end of November, actually, it's been all coming up all the way. So you can see this beautiful uptrend on the daily time frame. Looks like it is moving between a channel as well. Has now recently sort of come to correction, started to correct. So if it does bounce on this channel line, we could see it to continue move further higher inside of this. If it does break, we could actually draw a proper trend line instead, because a channel is more of like a guideline, where a trend line is also a guideline, but it can be a bit stronger than sort of something that doesn't touch all these wicks. So we sort of have these 2 points connecting, and we can use this as well to connect. So you can see it has actually broken through a trend line, so that channel might also show. So we'll just make this one a parallel line, so we can show you where the channel was. So that's the channel. So you can see it has sort of broken through that. Nice close on the daily time frame. So it could still move lower, but then again, the daily all sort of pullbacks on the daily can cause strong resistance or support zones, as we can see here. I'll just clear everything for you, so I just don't get too messy on the chart. So you can see previously we have had this sort of zone over here, which was the 1300, around about 1300 zone. We can see it ended up being a resistance area. Obviously you can see it's not quite perfect, but it is around that same area. So you can see it caused resistance, then again close to that same zone, it caused another support for the market to move further higher. So because this is on a daily time frame, if we take it down to the lower sort of time frames, let's just fix this quickly, like the hourly, actually the 4 hourly probably a bit better. You can see this was actually a consolidation zone. We were talking about this earlier in some of our videos, and also on our Facebook, those videos that we post on Facebook, Instagram and Twitter, that this the gold could possibly come back into the zone, tap into it and start consolidating again. So we could see possible consolidation within this area, and we could wait for a break as well. So this could be a nice move for next week, because as it is into the zone, we can sort of expect a little bit of uncertainty in the market and gold at the moment, just because it has shown us in previous history that it has actually caused a lot of consolidation. So if I pull this bit more to the left, you can see it has caused a lot of you can see support, resistance, consolidation. So here's you got your resistance, resistance again, and I mean this is all the way back to 2017 of December. It goes all the way back to September of 2017. Again, we can see here in October 2016, and you know it just keeps going further back and further back. So this has proven time and time again to be a very strong area for consolidation or support or resistance. So we'll see what happens, as it is still has to move either through that zone. Like I said, we will just keep an eye on this, and hopefully we can catch a nice move either next week, early next week, or during the time of next week. But hope you guys did enjoy it. That is it for this video. So if you guys did like it, do give us a thumbs up. Click the subscribe button and followed by the bell icon to be the first to be notified of whenever we release new videos. If you want to get in contact with us, please do so. You can find our contact details down below in the description of the video, or if you want, you can go to blackbullmarkets.com, click on the little green button at the top that says live chat, and our support team will be there for you. Obviously, since it's coming to the weekend now, you can see, if you want to get in touch with us, please do so. Send us an email at support@blackbullmarkets.com, and we'll get back to you as soon as possible. All right, everyone, thank you very much for watching. From everyone here at Black Bull Markets, safe trading and enjoy your weekend.